trading session there. But let's kickstart our market conversation. Dr. Tirthankar Patnaik, Director and Strategist for Institutional Research at Religare Capital Markets, joining us this morning. Mr. Patnaik, thank you so much for joining us in this leg of the show. Let me start off by asking you straight up itself, what are we expecting? Because it seems market are pretty much expecting a 25 basis point rate cut from the RBI in just a couple of hours from now. Do you belong to that same camp?
Yeah, I guess so, because we've been saying that we should see a total of 100 basis points for this year. We've seen 25 come in January. We are expecting 25 today, and depending on how the inflation trajectory points out, I think, and it is favorable, we will expect another 50 for the year actually.
Rajat, what are you expecting in terms of commentary? Because on the 29th of Jan we got that rate. Dr. Patnaik. We did get that rate cut on the 29th of Jan, but the disappointment came because the commentary was extremely hawkish. This time round, are you expecting them to turn a lot more pro-growth?
I think so, because post that you've had the GDP numbers come in. The advanced estimates are at 5%, and the third quarter number was at 4.5%. You've had the inflation numbers also come down. You've also had the RBI's condition in some sense of further rate cut depending on inflation, and that inflation they were expecting an exit rate of around 6.8% for March. Now we haven't got the March data yet, but the last data point was at 6.8, and though it was slightly higher than expectations, core inflation was at 3.8%, which should satisfy the RBI in our opinion. So we expect the commentary to get incrementally more dovish. We also expect some more thoughts from the central bank on the current account actually.
So, Dr. Patnaik, if we do get a 25 basis point policy rate and CRR cut from the RBI along with the dovish commentary, what happens to the markets then? Would we rally up, or do you think a lot of this is already priced in?
See, I guess the market, and we included, are expecting a repo cut. We are not really expecting a CRR cut. If you see the advanced tax numbers, they were up about 19-20 odd% over last year for major companies, and the LAF borrow number yesterday was about 1.4 trillion, which was high, but has been high for only about 3-4 days now, and before that it was getting lower. So although higher than the RBI's 1% comfort level of NDTL, the number we believe is manageable. So we are not expecting a CRR cut frankly, and we believe that the RBI could well do manage this tightening liquidity, which is temporary, with an open market operation. So yes, to answer your question, a repo cut and a pause on CRR should be neutral for the markets. You might see some profit booking actually come in on the PSU counters, but if the RBI really surprises, and degree of surprise there, if there's a CRR cut, then the market should be taking it slightly positively. We'll expect PSU banks to go up. If the RBI actually does a 50 basis point cut, then it's a major positive surprise.
Alright, so a whole bunch of expectations coupled in as to what could actually come in from the RBI in the next couple of hours from now. Let's take a quick break right now, but when we come back, we'll also get some technical perspective going with Rajat Bose. All that market commentary coming up in just 2 minutes from now. Stay tuned.
It's presented by BSC, Investors Protection Fund.
Now welcome back. You're watching First Trades, and that's the setup. Still just 0.1% higher is what the SGX Nifty seems to be indicating. So you could probably start on an extremely quiet note, but expectedly so, because you were expecting that what comes out from the RBI, so that market can actually take some kind of a direction from there on. It could probably be somewhat of a jittery to a nervous start ahead of that important policy meet today. So Tirthankar, let me ask you this then, in the back of what we actually discussed before you went into a break, what's the strategy looking like for the markets?
You see, strategy right now has two major hurdles in our opinion, and the RBI's commentary today is not one of them, I must add there. We believe that overall cost of funds in the economy will come down. So, we count RBI on our side of the markets for now. I think the major hurdle for the markets are growth. We don't know as of now how badly is growth actually hurt in India. Would we see a recovery in FY14 at all, or FY14 is it completely written off? And second part is of course the current account deficit, which for the third quarter in our opinion has been above 6% and is likely to remain fairly high, although slightly lower for the fourth quarter. So we might end up FY13 at nearly 5% current account deficit, and with growth at about 5.8%, our number for FY14, which is likely to actually come lower if the government actually adheres to its fiscal prudence plan of 4.8% to about 5.5% for FY14. I think those are the two major hurdles for the markets really.
All right, fair enough. That's a perspective in terms of the strategy going forward. Let's get a quick check going on technicals. Rajat Bose is joining us.
Well, it's looking very quiet. Dr. Patnaik, what's your call on Coal India? It sold off quite substantially yesterday on reports that the government would be divesting about 10% stake in the company. How much further downside are you expecting? Would this be an OFS that you'd possibly even consider subscribing to if you're not already invested?
So, not to take specific calls, but I guess the sell-off was sort of expected after the government put this steep discount, something that was not seen when we saw NTPC the last time. I think the stock has, hit closer to bottom. At this point, we will not be further sellers on Coal India really.
Well, just a quick check on the dollar P pair, because that's seen a pretty massive gap up opening. 53.99 is what we've got. It's up 54 now on the dollar P pair. That rate, of course, you're just waiting for it to update. But 0.3% higher is what we've seen in terms of the opening.
From this morning from HSBC Global Markets. Tirthankar, coming back to a couple of sectors that one should be keeping an eye out for. Banking is one play which has really been in focus for the last couple of days, maybe on the back of the news flow that we managed to pick up for last week. And in terms of valuations also, how are you reading into all this?
See, we've started the year positive on rate sensitives, and therefore we have an overweight on banks. That has sort of played out. And PSU banks, they have sort of sold off after the rate cut came on expectations. Even today, as I had pointed out earlier, if the RBI does meet expectations and just cuts the repo by 25 basis points, we should see some mode of profit booking. So at the moment, we are not really pushing PSU banks at all. For private banks, other than the concerns we've seen on money laundering and all over the last 3-4 days, we have been partial. But if you ask me from a 6 months perspective, we will be progressively reducing our weight on financials, given our concerns on the macro, frankly.
Rajat, how are you looking at the Bank Nifty? Because we discussed technicals earlier as far as Nifty is concerned, but specifically for Bank Nifty, what are the technicals telling you?
See, the Bank Nifty is more